please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Anuj. We are missing Sonia. We are also going to miss this 4-day weeks. We had 2 in a row. We are spoilt. But hereafter there is a long spree of 5-day weekdays. But nevertheless, today there's something to cheer. In fact, there is a lot to cheer. The Dow and the S&P 500 reaching fresh all-time highs is a very important signal for the bulls. It's a very important, prop for them. So not just Wall Street, but Asia is also in the green. Probably there is a realization that this really is a US versus China war. It's not US versus rest of the world, as it was initially indicated when President Trump was tweeting against just about all and sundry. So to some extent, global growth also, US growth, is mellowing these fears, or so it seems. It could simply be selling exhaustion. But let's take this last 48 hours of green on the screens with both our hands. Well, in India itself, you have seen a goodish bit of short covering. So there is space. And of course, crude, that would be a very important positive for us. It's not gone beyond 79. It is probably at the same place or a little lower than where it was when we stopped trading on Wednesday. That could also prop up the rupee, which incidentally closed fairly strong on Wednesday. So all this should add up to some ammunition for the bears to move back and the bulls to make a comeback, and such reactions could be sharp. I'll come to Anuj on that in just a minute, but Anuj, there's 2 worries for the market. The money market is deeply worried. Okay. There is a global, of course, yields went up because of rupee and crude and all that, but there is an ILFS issue, yes, which is a 90,000 crore gorilla. So that worry, domestic worry, will continue. And Yes Bank, for the Nifty Bank, Yes Bank is a heavyweight, that will be a worry. But for the moment, let's cheer. Do you think the technicals will cheer?
Morning, Lata. Look, when you're in a bull phase, you want gap downs because you want to buy that. When you are in a bear phase, which we are in right now, or correction phase, whatever, the evidence is, you want to see the market's reaction. 100-point gap up or 80-point gap up. I think the market opens right in the zone where it failed last time. There's a resistance. Also, I look at what the big stocks are doing. And big stocks are telling me that there's a bit of a problem right now with the market. And just take a look at some of the big stocks on Wednesday again. SBI saw 450 crores of delivery selling. Maruti saw 500 crores of delivery selling. HDFC Twins have been seeing selling pressure. HDFC Bank, in fact, 600 crores of delivery selling. Reliance saw IndusInd Bank. So all these stocks are seeing quite a bit of selling pressure right now. So the gap up is certain. Will it sustain? Also, the market is heavily net short right now. So the key question here is, does the short covering continue through the day, or does it only impact the weak bears who just pull out after the first gap up, and then the strong bear once again enters on a gap up? I think we'll find out. The FI selling has just picked up in intensity, and FI selling, it's important because these guys would sell if they're willing to sell at 11,300. Then they would sell at 11,400. I mean, if there's a 100-point gap up. So the first resistance would be Wednesday high of 11,332. Okay. My basic premise is that if you open somewhere around here, the first temptation would be to try a short trade just to see if that works or not. If that doesn't work, I think you will see a heavy dose of short covering in the second half. But in a weak market, after a 100-point gap up, you don't want to try straight away a long trade because you never know when that big selling comes in. Also, post the Donald Trump statement, if crude was really weak, it should have fallen to 77 at least, 76. It's still very close to 79. It's not as if it's collapsed. And we've seen that in the past. The Nifty Bank is very interesting because, it's technically very close to its support mark. It's within 0.5% of 200 DMA. Yes Bank has 5% weight. Now, let's see. If Yes Bank falls, say, 10%, it's already fallen quite a bit. But in the knee jerk, if it falls 10%, and I'm not saying that it falls 10% because Rana Kapoor is not there. It falls because the market will now believe that there's something wrong. Perhaps that's why, the RBI has taken this extreme step. So that could be the reason that you see, very interesting trades today play out on the Nifty Bank. Perhaps Nifty will be much cleaner play than the Bank Nifty because Yes Bank really would be your stock of the day, Lata.
Yeah, it would be the stock of the day. On the other side, if the market is green, it would be in the red. For me, the worry is exactly what you say about Yes Bank. An all-powerful promoter, and hands-on CEO, his absence will certainly slow down growth. Yeah. But every time there is a change of headship in a bank, what has been happening? Kitchen sinking. So now, if you're removing an MD primarily because of regulatory divergences, I just worry if the market's perception would be, will the new guy pull out more skeletons?
Yeah, exactly.
In banking, it's dibbly-dobbly.
Yeah.
You can look at it as stress, you can say it will recover, you can say no, it will only get worse, and you can pull out more skeletons. So all these are the fears, and that's why, for me, 10% looks a given.
Okay.
I mean, there are people who are talking of circuits as well, but let's wait and see. There's also a worry about ILNFS, but before I come to that, let me finish this flows argument with you. Can we pull up that chart of which Nigel had made of net FII flows and net DII purchases and sales? It is very clear, if you looked at the last few days, that the FII outflows are outweighing the DII inflows. Until all of last year and the first few months of this year, the inflows were more than matching the sales. Now that's not happening. Is this a lagged indicator?
No, that is an indicator that in the large stocks, which are the stocks where FIs own, stocks. Yeah. It's the HDFC Twins, Bajaj Finance, Bajaj Finserv. And, on this, I'll give you another remarkable stat. On Wednesday, 25 Nifty stocks were in the red, 25 Nifty stocks were in the green, and still we ended down 50 points. So the weight of selling is in the larger stocks. Sometimes, this makes market healthy because at the end of the day,
you're equalizing the
exactly,
market.
And we're complaining all through that the market is narrow. It's only a group of 7 or 8 stocks which is leading the market higher. Now that 7-8 stocks have corrected quite a bit now, 10 to 15%. Most of them, I think if you're an investor, it's a bit of a godsend that the market may have given you. If the bull market continues, these stocks will go back to all-time highs. So that explains this dichotomy between FI and DI number. But honestly, I don't read too much into that.
Yeah, it's quite possible that as sentiment changes and you see some all-time highs in the US and you see Indian markets recover, the DII flows can turn on a dime. So just remember, it's a lagged number.
Yeah, exactly. And the point Rhythm was making, the flows don't decide market, market decides flows.
Oh, absolutely. Well, let's get you some very elite opinion today. Wise experts, before we start trading this morning. Sakti Siva of Credit Suisse says the expensive 4 club, which is India, Australia, Philippines and Malaysia, has underperformed the region by 4% in 2018. But, she adds, more recently, the expensive 4 club has been outperforming. She believes that the key reason behind this recent outperformance is investors hiding from the escalation of the US-China trade war. She again highlights the poor fundamentals of the expensive 4. 1, valuations. India is trading at close to its highest ever premium of 72% to the region. 2, India, Philippines and Malaysia are associated with the biggest downgrades to 2018 consensus EPS so far. 3, India, the Philippines and Australia are associated with current account deficits and their currencies could come under further pressure. And 4th, India is the only market in Asia Pacific which is not associated with foreign investor capitulation. So if that happens, her argument is that things could get worse.
Okay, that's an interesting call from Sakti Shiva. Let's get you some money market views. Bhaskar Panda of HDFC Bank says the dollar index receded overnight. US stocks remain in positive territory and there were no fresh salvos in the trade front. He says in India, the central government officials pressurized the forex market. Bhaskar says all these positives should weigh in today as he expects the USD-INR pair to move towards 72 to the dollar mark. He says today's range could be between 72 to 72.5.
Actually, it should move towards 70. You should scare the bears.
Yes.
I mean, let them know that things move both ways.
Exactly.
It will help. I mean, I've always been saying that a weaker currency is the way to correct trade deficit and you should allow it to fall.
But not in
Likewise,
this,
allow it to, not in one stream.
Not in this manner, exactly. You should have some fear. It should not be that,
so it would be good if the currency went towards 71. That will at least give some volatility and, both sides to the market. Okay, now to the bond markets. Here there is pain. A softer exchange rate could spur some more adjustments in benchmark bond yields. Bhaskar Panda expects the 10-year benchmark bond yield to trade in a range between 8.02 and 8.07 for the day. Yields will do well as far as the G6s are concerned, but as far as AAA paper, AA paper, the CPs are concerned, the pain continues.
Okay, let's do one thing. Let's talk about the global cues. They look good this morning for a change. Here's Reema with the world view.
Good morning. Yes, global markets are fairly upbeat. One, as trade tensions have eased, and secondly, the strong employment data that we got from the US. So Dow has closed at a record level for the first time since January. It's seen a rally of close to about 250 points as jobless claims have fallen to its lowest level in 49 years. The Dow up 250 points, the S&P 500 and the Nasdaq gaining close to about 1%. The 10-year US bond yield continues to be around that 3%, above the 3% mark. It went to levels as high as 3.09% as well overnight. Europe too had a fairly good session. You had a green seen on the CAC, the DAX and the FTSE. In the Asian markets this morning, economic data coming out of Japan, where the September PMI has nudged higher to 52.9 versus 52.5. But the rest of the markets are also trading in the green, barring the Chinese markets, which have now dipped into the red. Hang Seng has a gain of close to about 100 odd points. For the Indian markets, the dollar index has eased compared to at least Wednesday's level, so now below the 94 mark. The next level technical traders are watching will be 93.7, which was the July low. Brent is somewhere hovering around that $78.5, $79 per barrel mark. Focus will be on the Algiers meet over the weekend, where OPEC and its allies will be meeting. Ahead of that, Trump has tweeted and asked for lower rates. The SGX Nifty is suggesting a positive start, and if you compare it to the Nifty futures level on Wednesday, the gain is even more, close to about 70 to 80 points. Back to you.
Okay. Thank you very much for that, Rima. And now here's the big CNBC TV18 exclusive. The chairman and CEO of JP Morgan, Jamie Dimon, spoke with Shireen Bhan, my colleague, and he says, well, there are a couple of things on the Indian economy. Extremely confident, believes that it can double in size in 10 years. But on the global front, he is concerned that, not that a Lehman will happen today, but certainly interest rates are on an upward trajectory. Listen.
You're going at 8%. The government has made tremendous progress, and I give full credit to your Prime Minister with the GST, infrastructure, benefits transfers, all the things that are making the economy grow better. And of course, you have a very vibrant entrepreneurial sector, corporate sector, et cetera. So we're quite optimistic of the long-term growth of India and pay a lot less attention to what happens to the rupee today. The rest of the emerging markets are actually doing quite well. And America's gotten stronger. The dollar's gotten stronger, but that's actually good for the world. The world is actually growing quite healthily. And so the emerging markets, it's just more like a teething pain. And you're absolutely right, they're not all the same. I don't even think they should be called emerging markets anymore. You're reducing corruption. You're fixing some of the banking problems in the non-performing sector. You change the bankruptcy laws. These are hard things to do. You travel around the world, you see governments who are unable to do that. And it really does hamper their economies, and this government's been very forceful in getting those things done. If we're growing strong and they're raising rates and reversing QE, that's actually, I think, going to be fine. Yeah. If it has to be reversed in a much faster way, if America has inflation, then you can see central banks doing things that we won't like and that people get a little bit concerned about. But in and of itself, the world's growing, and reversing QE is the right thing to do. Normalizing interest rates is the right thing to do. It's not a trade war. I call it a trade skirmish. It's a $20 trillion economy. So the actual economic effect is not dramatic. There is an effect on the psyche, the mind, as the trade skirmish become a trade war. Right now it's just trade tit for tat, and hopefully we'll get to resolution. I don't expect a trade war. But I also don't expect any progress before elections. So I think you have to wait after November to. The banking system is very sound. In fact, I always tell the regulators they'd be taking a victory lap. Lehman wouldn't happen today. Cyber terrorists and cyber countries, and that they can cause real damage. And we're already spending a lot of money, and JP Morgan is quite secure, but we should really worry about that. Electrical grids, airplanes, financial systems, clearing houses. I would put that as the highest risk.
All right, we don't speak enough about cybersecurity until, of course, it becomes a huge problem. We take a break on that note. We are coming back with the entire TV18 research team to give you the TV18 top 10 list of stocks. Welcome back. It's time to get micro, and our entire research team is standing by to tell you what is on their radar. First up, Anuj, what do you watch? So, V-Guard is a stock which is looking very interesting to me, Lata. On Wednesday, it made a bit of a bottom, and that's a higher bottom than last time. It's taken support at multi-month low. So I would want to see, there's big pickup in delivery volumes. I would want to see if it protects that low. So that could be really interesting. And BPCL, I think crude's lower, rupees higher than Wednesday. So that's a good combination. And it took support at 20-day moving average on Wednesday. So that could be
bit of a trade, at least for today.
Okay, so two green stocks.
Two green stocks. But of course, Yes Bank would be the stock of the day.
Now, I told you the worries of the market are growth as well as kitchen sinking by a potential next CEO, and this uncertainty as to, when, what, who, and what would be Rana Kapoor's role himself. So I'll just read out all the targets to you, and that will give you an idea of the fear. Citi cuts target to 270 rupees from 440, and that's not the worst. They've downgraded EPS. IDFC cuts the price target to 230 from 350. They don't cut EPS, they have cut the valuation from 2.2 times, they've brought it down to 1.5 times. Nomura cuts target to 345 from 500, but they say the bear case is 265. Okay, the Deutsche Bank still has a buy call. Target price cut to 350 from 440. These are all the buy calls where the target price is still higher than the current market price. Edelweiss 375, original price target was 450. And Jeffries 365, original target was 445. Short point, everybody has brought down their target price by at least 100 rupees.
Okay, so that's something to watch out for. Now keep in mind it's fallen from 390 to 319. But still, at least for starters, there should be some decline. Let's see if there's some buying at lower levels. Rima, why watching out for HCL Tech?
Because Anuj, HCL Technology has won a 3-year IT transformation deal from Asda, which is UK's third largest grocery retailer. Now, the size of the deal is not known, but the few analysts I spoke to said the company is tight-lipped about the size of the deal, but it could be a big one because, for one, Asda is a fairly big company. It's got close to about 600 stores, and it's a comprehensive IT transformation deal. They will be doing the complete back-end, overhaul. There will be systems maintenance, etc. So it shouldn't be too small a deal. So green for HCL Technology in the back of this win.
Fair enough. Sonal, you are watching Asian Paints?
Well, yes, Lata, Asian Paints will be in focus because the company has finally commenced the operations at its Mysore facility, and the initial capacity of this facility will be around 3 lakh kiloliters per annum. The company had already informed the exchanges back in 2015 that they will be starting a facility in the city of Mysore, and then they said that the capacity will be around 6 lakh kiloliters per annum, and the initial investment will be around 2,300 crores. So looks like there are more legs to capacity expansion, but for today, expect the stock to do well.
That's Asian Paints. But Lada, this Island FS issue is, we've of course discussed it, but it's looking bigger than what we initially thought.
What I think the market has paid attention to, it has not hit headlines.
Yes.
And it has not come to the white papers, definitely. But that's because the rupee and crude occupied center stage.
Yes.
That has already tightened the market, as I was saying. And then I told you, 10 banks in PCA, prompt corrective action, can't lend. 3 private banks, again, hampered by a change in guard and therefore will be risk averse. In that context, when you get this big gorilla of, 93,000 crore to be precise, which can falter, you have a problem. The mutual funds are saying that wherever there is ILNFS, the corporates who invested in those funds, thinking it is an all AAA fund, are coming and asking for redemptions. The NBFCs are worried that where else is this ghost sitting, AA, AAA, which actually is only worth BB, but the markets have not downgraded. So everybody is looking for over their shoulder to see if there are other such candidates. And banks, there is a potential 60,000 crore NPA possibility. Now, why I'm bringing it up today is the market was hoping that government will come in and tell the shareholders, LIC, SBI, Oryx, all these guys to put in some money and get things going. But when I spoke to Rajneesh Kumar, the chairman of SBI, yesterday, he quite clearly ruled out the government's intervention. This may worry the markets.
ILFS is from the contingent effect point of view, yes, it is a risk, but for every problem there is a resolution, and I am sure that the board, the management, the shareholders of ILFS and its subsidiary companies, they will be putting their head together and work out a solution. I have to say that government has a very limited role in this to play.
Yeah, and the issue here is not just looking at the ILNFS group stocks. They frankly are very small stocks. It's the contagion in the whole financial system, which is what is more important. So the issue is not about looking at ILNFS, transportation or engineering, these kind of stocks. The issue is to look beyond
You're
that.
right, absolutely. NBFCs like Shriram City Union or even ILNFS.
Exactly.
India Bulls
Housing.
Large ones.
Exactly. Banks have also, a lot of exposure. So that's the bit of a worry. But Nimesh, United Spirits, one-way downward move and fresh negative news now.
Oh yes, sir. It's a fresh negative news. The stock is likely to get in the red today. There is a report from Macquarie which suggests that the company has taken a price cut in McDonald's #1 of close to 6% in Maharashtra. Now, Macquarie has gone on to say that this would impact the FY19 EPS by close to 3%. Remember, Macquarie is a bit negative on the stock for a very long time now. They continue to maintain their underperformer rating with a price target of 443, and they believe that the street is quite ahead in terms of margin expectations where they are quite low. So, it's likely that the stock is going to be in red today. Also, there is an added information that last year Delhi government had banned VAT 69 and Smirnoff for 2 years in Delhi, and that probably will continue at least in the near term is what I believe. So two negatives for USL, and maybe the stock will be in the red today.
Okay, fair point. From United Spirits to an allied sector, if you please, Jet Airways. After Vijay Miller, I tend to link the two. But Jet Airways, what's the problem, Sona?
Well, there's some more trouble coming in for Jet Airways, as we are told that IT department is conducting survey operations in the Delhi and Mumbai office of Jet Airways. And we spoke to Jet Airways. They told CNBC TV18 that yes, there are surveys that are being conducted in these two offices. Additionally, there is also a Mint article which suggests that the overseas lenders of the company are asking the company to expedite the repayment of loans amounting to around 1,000 crore rupees. The total debt of the company as on March 18 was around 8,500 crore rupees. This report is not verified, but still, this news could put some pressure on the stock today.
Okay, thanks a lot for that, Sonal. Of course, there was this scare as well. In Jet Airways, the mid-air scare.
Yeah, that was quite scary.
That was quite scary. But Anisha, what stocks in US?
Well, I have a lot of green ticks that I'm going to talk about. I'll start with GE Shipping because they have taken delivery of one of the gas carriers. So that should be taken positively. A couple of capacity expansions as well. First up on Gravitas, they have expanded the production capacity in Chittoor, Andhra Pradesh. So that should be taken positively by the street as well. For Nelcast, they have actually completed the phase 1 of their expansion that they had decided to take earlier. This is a capacity of around 18,000 metric tons. So again, a positive for that one. A couple of award wins for Dilip Bilkon. They have declared L1 for around 230 crore worth of a project. So good green tick on that one. NBCC, they have secured total business of around 920 crores in the month of August. Given the pressure that we have seen on the execution, this will definitely bring a breather for the stock. Allahabad Bank, wherein the board has given the approval to take an enabling resolution of a QIP of around 1,500 odd crores. So that will be in focus. And lastly, on Graphite India, I remember there has been this inspection that the Karnataka Pollution Board did on one of their units. This might be a sentiment dampener, but analysts at Jefferies and Macquarie believe that there will be no impact on volumes as well as margins.
Okay. Well, that's a lot of stocks that our research team is watching. And I'll just remind you, I'll recap all those stocks for you. Positive news flow are for V-Guard, possibly BPCL. HCL Tech, definitely positive news flow. Asian Paints, GE Shipping, Dilip Bilkon, Graphite India, NBCC, Allahabad Bank, Nelcast and Gravitas India. Stocks with negative news flow, of course, Yes Bank, the ILFS triplets, ITNL, IRNFS Engineering and ILFS Investment Managers. You could take other NBFCs like DHFL, Indiabulls Housing. Also, negative news for Jet Airways and United Spirits.
Okay, as the exchange for dollar gets revised to 73.65 for all imports, Anshu Sharma caught up with HPCL CMD M.K. Surana and began by asking what kind of impact will it have on OMCs.
Whenever there is an increase of 1 rupee in dollar, it may have an impact of around 40 paisa to 45 paisa on the crude prices, the product prices. In today's scenario, there is both the crude prices are also high, product prices are also high, and the dollar is also high. And that is a combination of many factors, which are trade wars, the Iran sanctions, some impact because of the hurricane situation in US Gulf. And that is keeping the crude prices high. But $80 is a resistance mark in the crude prices. But there were also some narrations recently from some of the crude producing countries that above $80 also they will be comfortable. In a near future, the crude prices may be slightly higher only. That's what I suspect. And but it's still to assume that it may be going above 85 or so will be something. I will hold my thoughts on that right now. I will still consider it to be more towards 80.
There's a burden on consumers with regards to petrol and diesel, and in the past government has said that they're working on a long-term plan to sustain these high crude prices. So have you heard anything from the government with regards to this? Is there any cushion to absorb these shocks?
No, when government is working on a long-term situation, one thing definitely they are working on is how to reduce the total imports. Honorable Prime Minister also given a call that we should try to reduce the imports by 10%. In that direction, increasing the blending of ethanol, increasing the production of ethanol, increase the efficiencies of the vehicles as well as the industries, refineries, so that the fuel which we burn for production itself get reduced. At the same time, more use of cleaner fuels like gas, natural gas, biogas, bio-CNG. So all this multi-pronged approach is being adopted to have alternatives and coupled with renewables as far as power generation is concerned.